Good evening, everyone. So, how are you? So, I hope na with all these changes that we are experiencing right now, I hope na okay lang talaga kayo ha. Alam namin na medyo mahirap talaga. In fact, kami is medyo nahihirapan din because basically all these things are new to all of us. But then again, we are asking for your patience and understanding because even though yun nga nahihirapan tayo ngayon, but we need to move forward, no? We cannot just rely on staying or we just really cannot be contented na wala tayong gagawin. We need to move forward. So kami, we are asking for your patience na sana, although nahihirapan tayo ngayon, intindihin na lang natin because I'm sure, we are sure na when all things settled, when all things will be settled, babalik din tayo sa normal. Okay? So, so tonight, or today rather, we will officially start na our discussion for intermediate accounting 2. Okay? I have provided the written material for this and the exercises. So, I hope na you have already read the materials and already practice the exercise that was provided, no, for us to have or to easily understand the topic because basically this discussion is just supplemental to the materials that was already provided. Okay, so let's begin. So our first topic for intermediate accounting 2, we will deal with liabilities. So, just a short brief lang on what will be discussed for intermediate accounting 2. We will try to finish onto equity. But kung hindi talaga makaya, I will try to make sure na all the topics for liabilities will be covered by intermediate accounting 2. Then, those topics na hindi nyo na-cover for intermediate accounting 1, doon natin ipapasok sa intermediate accounting 3 ninyo. Okay? So, basically, kung mapansin ninyo, for intermediate accounting 1, our target was to finish all topics regarding or relating to asset. While for intermediate accounting 2, the target is to finish liabilities and equity. But kung mapansin niyo din na medyo mahaba talaga yung mga topics, so kaya hindi yan siya nakakaya. That is why tinatapos yan siya lahat sa intermediate accounting 3. So I hope by now na since second year na kayo, medyo hindi naman siguro yung masasabi natin na strong, but rather somehow mayroon na kayong background on what is really accounting, especially na tapos na kayo sa basic accounting ninyo, then nag-cost accounting na kayo, then initially financial accounting. So I hope na may maganda na talaga kayong background. Okay? So, let's start, no? So, first topic is the general concept for liability. Okay? So, what is a liability? Okay? So, as defined by the Philippine Accounting Philippine Accounting Standards, liabilities are present obligations, okay, of an entity to transfer an economic resource as a result of a past event. Okay? So again, present obligation to transfer an economic resource as a result of a past event. Okay. Now, so if you may notice, okay, there are three essential characteristics on what we treat or what should be recognized as an accounting liability. That is, there should be a present obligation, there should be a transfer of an economic resource, and that obligation should arise from a past event. There should be a requirement for us na we are basically obligated. We do not have the right na mudili. Whether we like it or not, there is an obligation. And that obligation requires us to transfer an economic resource. Okay? There is an outflow of economic resource. So, by talking of an outflow or by when we say outflow of economic resource class, let us remember, no, or let us take note that what is stated is economic resource. Okay? So, resources by the company or resources of the company na basically generates or what we can say or economic resource, no? Economic resource. So that means na non-equity. Okay? Non-equity. Non-equity resource. So, with that statement, there is an obligation for us to transfer asset, okay, to transfer non-equity or non-equity resource. Okay, to transfer non-equity resource. So, whether cash, okay, because basically what is stated is asset. So, it can be cash or non-cash as long as it is an asset. Okay? So, that is why sometimes, no, there are transactions na the entity is obligated to transfer dividends, okay, in the form of shares. Kumbaga, this becomes a share dividend payable, no? Under the Philippine accounting standards, share dividend payable is not a liability. Why? Because the obligation is not to transfer an economic resource, but rather it is a transfer of an equity shares. So, dividends payable is not a liability. However, if the dividend declared, okay, is property or cash, that becomes a liability. Why? Because the required value to be transferred or the obligated resource to be transferred resulting from that obligation is asset. Okay? You have to remember that. Okay? You have to remember that. Third is that a liability or an accounting liability should be from past event, no? Obviously, you cannot incur a liability if there is no transaction or there is no transactionary event supporting that transaction, no? Or supporting that obligation. Okay? So obviously, it all happens in the past, no? It all happens in the past. Okay? So remember, For a liability to be recognized as an accounting liability, all these three should be present. Dili kay there present obligation lang, or there is a transfer of economic resource, or resulting from past event, but all these three. Okay? And also, you have to remember na it is termed as an obligation. Meaning, the term obligation that we are talking here is that obligations basically enforced by law. Okay? Meaning backed up by law. Perfectly executed by law. Okay? Dili kay istorya lang, verbal lang, maingon lang ta nga naa kay utang sa kuha. It should be backed up by law because the obligation that we are talking here is the same concept on what you have discussed with your law 1, obligations and contracts. Okay? So that is definition of liability and its essential characteristic. Okay? So next, what are examples of liability? Okay? So, very common, very simple lang. We have accounts payable, okay? To suppliers, or the most common, no? Accounts payable to suppliers for the purchase of goods or services, okay? Operationally, amount withheld from employees for taxes, contribution to the SSS pension fund. So, this example basically is those, if you are familiar with na, if an employee is, what you call this, diba may sweldo ang empleyado, tapos may mga deductions, no, sa empleyado na required to be remitted to governmental agencies. So basically, it is a liability of the entity because kumuha sila ng pera na dapat i-remit nila. Okay? Liability. From employees, amount withheld from employees. Wages, interest, or royalties na incurred na pero hindi pa nabayaran. Accruals. Okay? Dividends declared as example, as given as an example kanina. Declared dividends. Pero you have to remember na not stock dividends because stock dividend does not promote or does not or is not do not require outflow of an economic resource or an asset. Okay? Deposits, advances from customers and officers. Debt obligation for borrowed funds. Okay? Mga contractual obligation supported by notes, mortgages, bonds payable. Okay? Notes, note payable, mortgages, mortgage payable, and bonds, bonds payable. Okay? Okay, supported by notes, mortgage, and bonds payable. Contractual obligations. And your income tax payable. And last example is your unearned revenue. Revenue already received. The cash is already received, but it is still not earned. No? So you are familiar with this in your accounting 1. Okay? So, how do we measure liabilities? Okay? Theoretically, liabilities is measured at present value and subsequently at amortized cost. So what do we mean by present value? I guess we have already tackled this, or you have already tackled this in your intermediate accounting 1, no? So when we say present value, it is the discounted, or in a layman's understanding, kung ano yung pera na matatanggap mo in the future The present value is what is its value today. Example, may ini-expect ka or may in-expect ka na babayaran or na ma-receive 5 years from now. Okay? And the amount, let's say, 5 million. No? The concept of present value is that 5 million that you will receive, okay, in the future, after 5 years, the value of that today is not 5 million. Okay? The value of that today, that is your present value. Now, you may ask, why? No? We have this concept, okay, in financial literature, the concept of time value of money. No? As time goes on, okay, as time goes on, the value of money changes. Why? There are a lot of factors why the value of money changes as time goes on. The major factor is what we call inflation. Okay? Is what we call inflation. So because of inflationary factors, economic factors, the value of your money will change in different time period or as time goes on. Okay? The peso before is not the same value as the peso today. No? And your peso today will not have the same value to your peso in the future. So that is time value of money. Okay? So, to measure liability, okay? To measure liability, you need to measure it at present value. Okay? Because theoretically, liabilities basically, in general, the term of liability is more than 1 year. So maybe 2 years, 3 years, 4 years, no? In general, the concept of liability, it is an acceptable fact that liabilities are long-term. So we need to measure it at present value. And subsequently, at amortized cost. Okay, that is in theory. However, for liabilities considered as short-term, okay, considered as short-term, it is a given practice that we measure it at face value. Why? Because the concept is, because it is considered short-term, okay, the effect of the time value of money is immaterial. Okay? Immaterial. Meaning, 0.000 centavo lang ang difference. So, very immaterial. That is why it is an acceptable practice that for short-term liability, it is measured at face value. But the correct term, if we are asked, how do we measure liability? It is measured at present value. Okay? It is measured at present value. Now, you may ask, no, why immaterial ang effect for short-term liability? Okay? So let us remember, or let us take note that when we talk about short-term liability, these are the types of liabilities na, let's say, 1 month lang, 2 months, 3 months, 6 months, 1 year. Basta less than 12 months. So ang concept is, in financial terms, no, if it is, or if the term for a financial transaction or a liability, in this case, is just more than 1 year, it is considered that the effect of time value of money is very material, because if we are to compute that, or if we are to discount that, we will notice that the effect of that discounting is very material, no? Gamay lang yun siya, or maliit lang talaga ang amount. Okay? So, again, no? Theoretically, liabilities measured at present value, and subsequently at amortized cost. But it is a acceptable practice that for short-term liability, we will measure it at face value. Kung ano yung inutang, yun talaga yung value. Okay? So next. So how do we classify liabilities? Okay? So how do we classify liabilities? Now, in general, we classify liabilities into two: current liability and non-current. Okay? So, what is a current liability? Philippine Accounting Standards 1 or PAS 1, paragraph 69 states that an entity shall classify a liability as current when there are four requirements. Number 1, the entity expects to settle the liability within the entity's operating cycle. So, we are familiar with what is operating cycle, di ba? So, when we talk about operating cycle, that is, or how the operation of the company or the entity moves from the purchase of materials, okay, to the making of the product, okay, to the selling, okay, until collection, then going back again. So that is your operating cycle, no? Well, this example is for a manufacturing, but you can apply this if you are trading, no, from the purchase of inventory, from the selling of the inventory, then from the collection of cash. So that is your operating cycle, di ba? That is your operating cycle. So basically, when we talk about operating cycle, this is the cycle of the company wherein from the outflow of cash until collection, then going back to the outflow of cash again, then to the collection. So that is your cycle, no? So, if the liability, if the obligation is expected to be settled within that period from the purchase until sa collection to the purchase again, or from the outflow to the collection and going back to the outflow again, that is a current liability. Okay, klaro na siya, ha? The entity holds a liability primarily for trading purposes. The liability is due to be settled within 12 months after the reporting period. So that means, if the reporting period, meaning when we say reporting period, that is the cut-off date of your financial statement. So meaning, if the cut-off date of your financial statement, let's say, is 12/31/2020, let's say 2020, within the period from 12/31/2020 until 12/31/2021, within this period, if the liability is due to be settled within this period, then that is current. Okay? Fourth, the entity does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting period. So meaning, by this statement, there are certain instances, manggod, no, na if we are to borrow or if you have a liability, you have been given the right or the privilege na tagaan kag leeway na murag kumbaga tagaan kag allowance na dili sa ka allowed ka nga dili sa ka mobayad or allowed ka nga mobayad beyond the agreed term. Okay? That is why unconditional right, no? You have to remember that current liability siya if you have an unconditional right, meaning you are freely, walay barrier to that privilege or right. Okay? Na pwede nimo or pwede mong hindi bayaran, defer settlement. But for at least 12 months only. Okay? So that means na if your reporting period or cut-off date of your financial statement is 12/31/2020 and you have the privilege na pwede kang hindi magbayad until 12/31/2021 within that period, then that liability is to be considered as current. Okay? So, special note lang nito is that you have unconditional right, no? Pero if the case is you have a privilege subject to condition, so that means that becomes or that is now not unconditional. That is conditional right na ngayon, no? So if it is a conditional right, then it is not current. Okay? It is not current. It is not a current liability. So, klaro yan siya ha? Next. What are those non-current liabilities? No? The standard is very straightforward. Ang dinefine lang nila is kung ano yung current liability. Ngayon, kung ano yung mga liability, klase ng liability na hindi papasok kung ano ang current liability, classified siya as non-current liability. Okay? So that means na if it is beyond the operating cycle or it is hold not primarily for trading, not for trading, or beyond 12 months or conditional right, okay, to settle, no, beyond 12 months, that is non-current liability. Okay? Klaro yan siya. So example niyan is non-current portion of a long-term debt. Obviously, non-current yan siya. Finance lease liability, no? When we say lease, okay, lease, kung hindi kayo medyo familiar, what is a lease? That is basically rent, no? Idea lang, no? In general, there are two types of lease. What we say, the first type is operating lease, and the second type is finance lease. Okay? So, itong operating lease class, ito yung medyo familiar tayo. No? Ito yung parang normal para sa atin, yung typical na renta na as renter, gagamit ka in exchange for rent payment. No? Finance lease, okay? Finance lease, kung iintindihin natin to na medyo madali lang, no, sa ngayon, ito yung concept ng rent to own. Okay, yung rent yung agreement ninyo, okay, rent yung agreement nyo, but you have been given the right or privilege that after certain period of payment, magiging sayo na yung property. That is finance lease. That is why a finance lease is considered as a liability. Because there is a notion that at the end of the term, yung inuupahan mo, there will be change of ownership para kang bumili ng asset in exchange for your rent payments. Okay? Long-term obligation to officers, yung mga dapat babayaran sa mga officer ng company. and long-term deferred revenue. Again, deferred revenue, hindi lang tayo medyo malito dito, medyo maganda lang yung pagka-English, but basically this means na ito yung mga income na nakuha mo na, hindi nyo pa or hindi mo pa na-provide. Okay? So, special notes or consideration for liabilities, no? How do we classify? Okay? Now, long-term debt, obviously, these are non-current. However, how do we classify those long-term debt na natapos na yung term, tapos magju-due na siya within 1 year? No? Let's say, example, may utang ang company, kayo as company. Okay? The term is 5 years. No? You are now in the 4th year. So meaning, 1 taon na lang yung babayaran. 1 year only. The question is, itong liability mo ngayon na magju-due within 1 year, ano na ang classification niyan ngayon? Do we classify it as current or do we classify it as long-term? Okay? Now, the standard states, because it is now to be settled within 1 year, pasok na siya sa classification on what should be classified as current, then it should be reported as current liability. Okay? Even if the original term was more than 12 months, or there was an agreement, there was an agreement to refinance or i-reschedule to give allowance on the term na nakumpleto after the cut-off date, after the reporting date, but before financial statements are issued, no? So, basta the point is, if the long-term debt falls now within that term na ang due niya is less than a year na lang or 1 year and below, current na yan siya. Okay? Even if the original term was more than 12 months. Okay? Current na yan siya. And also, even if nag-agree kayo ng creditor na i-defer pa yung payment for a longer period after the reporting period, no? This notion, itong letter B, we just have to remember, no, na current siya if the agreement was happened after the reporting period. Okay? Happened after the reporting period because we have to remember, no? We are to present what should be presented in the cut-off period. So, kung ano yung makikita natin within that cut-off period, no? The cut-off period is the reporting period. Yun talaga yung i-report natin, no? So, kahit na alam natin, no? Kahit nalaman natin na mayroong agreement after that cut-off, kasi yun nga, before the financial statement are issued, okay? Kahit nalaman natin na may extension of the term na magiging more than 12 months na naman yung term niya because the agreement happened after the reporting period, then that liability is to be presented as current, no? What will happen to that transaction, no? At the start of the next accounting year, this will only be considered as an adjusting event. Okay? I-adjust lang natin. But in as much as for that particular cut-off period is concerned, current siya. Okay? Current siya. Okay. However, no? If the long-term refinancing is completed on or before the reporting period, okay? On or or before the reporting period. Okay? The refinancing is an adjusting event. Okay? Thus, it will be classified as non-current. Okay? So meaning, if the long-term refinancing, okay, if the long-term refinancing is completed, agreed before the cut-off period, then obviously, uh, obviously, during the cut-off period, nalaman na natin na non-current siya because there is now an agreement, okay, there is now an agreement na may extend yung term. Thus, changing that liability now karon, reverting to its original term na magiging long term na naman kasi there is an extension before the cut-off period. Okay? So, non-current siya. So, in summary, if the agreement to extend the term of the law of the obligation is perfected after the cut-off or the reporting period, then it is a current liability. However, if the agreement to extend was perfected before or on the cut-off period, then it is a non-current liability. Okay? Next. Okay? If the entity, again, you have been given the privilege, the unconditional right to extend the obligation for at least, remember the term used is at least 12 months, not shorter than 12 months after the reporting period, then the liability is non-current. Okay? So those are the things na dapat natin ma-remember. Okay? So next. Covenant. Okay? So what is a covenant? Okay? What is a covenant? Covenants class, okay? These are what you call conditions, okay? Attached to a certain liability, no? Example, no? Basic lang na example, no? Okay. Pahiramin kita ng pera. 5 million. Okay? With the condition na within 5 years, dapat wala ka pang or hindi ka dapat mag-boyfriend or mag-girlfriend, no? That is the condition. Okay? So the condition there, no, na hindi ka dapat mag-boyfriend or mag-girlfriend, that is the covenant. Okay? That is covenant. Okay? So, what are the considerations for covenants? Okay? So, in essence, okay, ganito kasi yung concept niya, no? In essence, let's say, no, company A, okay, borrowed money from company B, okay, 2 million, okay, 2 million. Now, condition ngayon ni company B is that pahiramin niya ng 2 million si company A provided that net income of company A in the next 2 years should be higher than 2 million. So, let's also say na ang utang ni company A kay B is, let's say, ang term niya is 5 years. And let's say the cut-off period is 12/31/2020. Ang utang nangyari, let's say, November 30, 2020. Okay? So, if we are to report financial statements as of 12/31/2020 class, okay, as of 12/31/2020, then this liability is to be presented as what? Obviously, non-current liability because 5 years ang term. Correct? Now, 12/31/2021, this is still a non-current liability. Correct? However, on December 31, 2020, ang net income ni A ngayon is now 1,500,000. So, example lang, no? It's now 1,500,000. So, what happens now? The covenant has been breached. Okay? So, the point is, if there is now a breach in covenants, the obligation now becomes due on demand. Okay? If the obligation now becomes due on demand, that means anytime na mag-demand yung creditor sa iyo na dapat bayaran mo siya, dapat magbayad ka na, regardless of the term. That is what we meant by due on demand. So again, if covenants are breached, okay, if covenants are breached, that becomes due on demand. The liability becomes due on demand. Hindi ka na makakahindi sa creditor pag singilin ka. Kasi that is your fault. You have breached the condition. Okay, you have breached the condition. So, what is now the accounting treatment? Okay, what is now the accounting treatment? If covenants are breached, even though the term is long term, more than a year, okay? More than 12 months. That liability karon ngayon will now become current. Klaro yan siya, ha? Current. Even if the creditor agreed after the reporting period, so same na pag-usapan natin kanina, na hindi siya magdi-demand ng payment. Okay? Or, however, if the creditor agreed before the cut-off period na, sige, kahit na na-breach mo yung usapan natin, hindi kita sisingilin. Okay? Basta back up by proper documentation and contract na hindi siya sisingil. Okay? Na, bibigyan kita ng allowance pa, at least 12 months, no? The least 12 months as a minimum 12 months. Then, that is the only case it becomes non-current. Okay? That is the only case that it becomes non-current.